Good evening. Today we will be covering the post-market analysis dated the 22nd of June 2022. Markets once again went into a plunge mode as panic-stricken investors taking cues from an early slump in European indices and weakness in other Asian gauges dumped equities, especially metal, power and realty stocks. Nifty slipped lower after a volatile trading session and ended at 15,413 points. On the higher end, 15,500 remains a level of resistance. On the lower end, support is visible at 15,300. Broader markets mirrored the losses in main indices. Coming to SENSEX, at close, the indices was down 709.54 points or 1.35% at 51,822.53. About 1,218 shares have advanced, 2,025 shares declined, and 105 shares are unchanged. The weakness of the global market due to quantitative tightening pulled the market down. The BSE Mid-Cap Index fell 1.5% and Small Cap Index shed 1%. On the stock-specific front, BPCL, Hero MotoCorp, and TCS were among the top Nifty gainers. Starting with BPCL, we could see the price trading at 305 points with a positive change of 1.25%. BPCL has shut half of its crude processing capacity at its 2.4 million barrels per day in Mumbai refinery, while oil prices tumbled on Wednesday amid a push in fuel taxes. Hence, by lowering the supply of fuel, they have either maintained or slightly increased the prices, ultimately leading in the hike of the share price. Coming to the automobile sector, a hike could be seen given the factor that Indian automakers line up $5 billion of investment for manufacturing electric vehicles, EVs. Auto component producers are seeking to march in step by boosting capital expenditure. A positive hike could be seen in the stocks like Hero MotoCorp, Maruti Suzuki, Honda Motors, and so on. In addition to that factor, Hero MotoCorporation has strengthened its footprint in Turkey with the introduction of 3 EuroV products from its portfolio. While TCS has seen a slight hike in the percentage by roughly 0.34%, according to a statement the company has bagged a deal from Aadhar Housing Finance to improve business operations and could help the company in market expansion in the near future. On the flip side, Hindalco Industries, UPL and Tata Steel were among the top drags, down up to 6.7%. Starting it off with steel and metal industry, recently, the Union government waived import duty on raw materials such as coking coal and ferronickel used by the steel industry and raised the export duty. The move has been made to tame price hikes and strengthen the domestic steel market. If that was not all to affect the momentum, the disruption caused by the ongoing Russia-Ukraine conflict made it even worse. Hence, we could see the fall in the price of companies like Tata Steel, ONGC, JSW Steel, and so on. While UPL could be seen closed at 613 points with a downfall of 5.42% today, the company had seen a drop of 23% in a month after the completion of buyback offer, now trading at a 52-week low. Talking about the recent developments in the corporate segment, we have Kalpataru Power Transmission Limited, a leading global engineering, procurement and construction player in the power and infrastructure contracting sector, and its subsidiaries have secured new orders. Notification of awards of 2,290 rupees crore at a consolidated level. These include orders from international markets in the power transmission business of 1,416 rupees crore. The company and its subsidiaries also won orders for the construction of an elevated viaduct and 5 elevated stations of the Kanpur Metro Rail project, civil works for a data center and buildings and factories projects in India totaling 874 rupees crore. Ultimately, the value addition for the company would be in the form of increased skills in civil, electrical, and heavy infrastructure industries along with an improvement in market position within the global EPC area. Tata Steel will diversify beyond manufacturing the alloy into 3 major verticals: composites, graphene, and medical materials and devices. Tata Steel has the objective to build its business in knowledge and intellectual property intensive and non-cyclical new materials. While there exist risks of high input costs, the growth of the Indian steel industry is likely to remain stable as domestic demand is expected to remain robust and global supply-demand dynamics may present export opportunities. During financial year 2023, the company's largest capital allocation will be towards the acquisition of Neelachal Ispat Nigam Limited. Earlier this year, the company won the bid to acquire NINL for 12,100 rupees crore. In a step designed to cut consolidated debt, Jain Irrigation Systems Limited, JISL, will merge its international irrigation business, IIB, with Temasek-owned Rivulis Pte Limited. The cash proceeds will be used to pay off 2,700 rupees crore of overseas debt. IB's enterprise value is pegged at 4,200 rupees crore. Post-transaction, Jain Irrigation will hold 22% stake valued at 1,300 rupees crore in Rivulis. About 2,700 rupees crore will be used to pay off overseas debt and 200 rupees crore will be used to settle receivables. The merged entity will have $750 million in revenues. Jain Irrigation will hold 22% in the merged entity while 78% will be with Singapore's sovereign wealth fund. Last but not the least, fruits importer IG International has entered into a joint venture with Mumbai-based packaging company Esquire Corrugation to manufacture sustainable fresh produce carton packaging. With IG Esquire, company is committed to revitalizing the corrugated packaging business by integrating environmental sustainability across all of the processes and outputs. You can contact us from the details mentioned on the screen via missed call, WhatsApp, or email. Thank you for being patient and listening the video to the end. Please do like, share, and subscribe the channel for the latest updates in the market. That's all for today. See you tomorrow.